Hello everyone, welcome back to yet another important session on goods and service tax filings. So we have already covered module 1, that is fundamentals of GST. In that module, we covered the core concepts and relevance of GST in India. We learned about what is GST and why was it introduced. We learned about the different types of GST, that is the different components: central goods and service tax, state goods and service tax, integrated goods and service tax, and union territory goods and service tax. Then we moved to registrations. We learned about what are the different threshold limits for different set of taxpayers and who are required to get registered under the GST. Afterwards, we learned about the GSTIN structures and what are the different compliance cycle of GST. We learned the different due dates and the penalties and late fees levied by the department in case of defaults in GST returns. So now let us move towards the second module. Module 2, it includes taxpayer types and registration. We'll learn about the different types of taxpayers, that is regular, composition, casual, and non-resident taxable person, that we call NRTPs. Then understanding the GST portal, we'll have a dashboard walkthrough. Then what documents are required for registration under GST. Then we will have a step-by-step demo of GST registration. And at the end, we'll see the amendments and cancellation provisions under the GST. So let us start with the first topic, that is types of taxpayers: regular, composition, casual, and non-resident taxable person, that is NRTP. So let us see who is a regular taxpayer. Businesses or taxpayers whose turnover is in excess of rupees 40 lakhs are required to get enrolled under GST. It could be a case of mandatory registration as per the application of section 24 of the Act. So let us see who are regular taxpayers. A regular taxpayer is registered under GST whose turnover has exceeded the basic threshold limit of 40 lakhs in case of goods and 20 lakhs in case of services. The threshold limit for special category of states is different. For Manipur, Mizoram, Nagaland and Tripura, this limit is 10 lakhs in case of supply of goods only. Also in case of services, it is 10 lakhs. In the state of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana, this limit is 20 lakhs for both goods and services. In other states like Jammu and Kashmir, Assam, Himachal Pradesh and other states, the limit for goods is 40 lakhs and the limit for services is 20 lakhs. So let's see the features of regular taxpayers. They are required to file monthly or quarterly GSTR 1 and 3B and annual GSTR 9 or 9C both. They are allowed to claim input tax credits available subject to restrictions imposed by section 17(5) of the GST Act. For example, ITC on purchase of raw material is available, whereas ITC on purchase of car is not available. Similarly, there is no restriction on the interstate trade for regular taxpayers. For example, Gada Electronics, who is registered in Maharashtra, is allowed to sell goods to Sundarlal, who is registered in the state of Gujarat, that is outside the boundaries of Maharashtra. So let us take few examples of regular taxpayer. Wholesalers, e-commerce sellers, service providers like chartered accountant firms. First example, Mr. A is a wholesaler of paint who sells goods to retail shops across his district, is required to get registered under regular scheme if his turnover exceeded the prescribed limit. In example 2, Gada Electronics selling his products through Amazon. Both Gada Electronics and Amazon are required to register under GST under the scheme if his turnover exceeded the prescribed limit. Third example, Chartered Accountant Vishal Chandra, a practicing chartered accountant, is required to register under the GST under regular scheme if his turnover exceeded the prescribed limit of rupees 20 lakhs. Let us understand the composition scheme. A taxpayer who is enrolled under the composition scheme is required to discharge his tax liability by paying a fixed percentage of his turnover every quarter. For example, if a trader has opted for composition scheme, he is required to pay 1% of his turnover at the end of each quarter. So, a person who is registered or is liable to get registered under GST can opt for composition scheme if his turnover is up to rupees 1.5 crores. This 1.5 crores is read as 75 lakhs in some special category of states. What are the special category of states? These are Arunachal Pradesh, Tripura, Manipur, Meghalaya, Sikkim, Mizoram, Uttarakhand and Nagaland. So the composition scheme is a scheme for small traders, manufacturers and restaurants which serves non-alcoholic beverages. The composition scheme is now also available for service providers whose turnover hasn't exceeded rupees 50 lakhs. So for the purpose of ascertaining the eligibility to opt for composition scheme, the turnover is calculated to include taxable supplies, exempt supplies, interstate supplies, export of goods and services, taxes other than GST, along with turnover as on the date of applying for composition scheme. It excludes inward supplies under the reverse charge mechanism, taxes including cess under GST, and interest on loan, deposits, and advances that are being exempt in nature. So the features of composition scheme are quarterly return, that is CMP 08 is required to be filed, in which turnover is declared and taxes are paid. It acts as a challan cum return. Then annual return, that is GSTR 4 is required to be filed, the due date being 30th June of the next financial year. Under the composition scheme, the taxpayers are not allowed to avail any input tax credits. So the rates of composition scheme as per section 10.1, 10.2 and 10.2a are: for manufacturers it is 1%, half of which goes to state and half of which goes to center. For restaurant services it's 2.5% and 2.5%, that is in totality it is 5%. In case of other services it is 3% and 3%, that is 6%. So there are certain limitations of composition scheme. First being non-availment of input tax credit that we have already covered. Next, if a registered taxable person has opted for composition scheme, then he cannot do interstate supply. For example, Mr. Ram, who is registered in Jharkhand under GST, opted for composition scheme. Now Mr. Ram is not allowed to supply goods or services from Jharkhand to any other state in India. If he do so, then he is not eligible for composition scheme and he must change to regular scheme. The next limitation is, if a registered taxable person has opted for composition scheme, then he cannot sell his goods through e-commerce platforms. For example, Gada Electronics registered under the GST and opted for composition scheme, then he is not eligible to sell his products through Amazon or Flipkart. Though the supply of goods is permitted by composition taxpayers through e-commerce operators, provided interstate supply shall not be allowed, TCS will be collected by e-commerce operator, and such supplies are reported in GSTR 8 by the e-commerce operators. Casual taxable person. They are the next set of taxable person. Who is a casual taxable person? A casual taxable person is a person who doesn't have any fixed place of business in a state where he is willing to conduct a business for certain occasion or for some time. For example, Mr. Ram, who is a toy seller in Jharkhand, is willing to sell his toys during the festive season of Durga Puja in Kolkata. So, he is required to take registration under the GST as a casual taxable person. Casual taxable persons are also required to do certain compliances. If a person is a casual taxable person, then he is required to take registration mandatorily as per section 24. However, the threshold limit of 20 lakhs or 10 lakhs is available in case of casual taxable person who is making interstate taxable supplies of notified handicraft goods. The registration certificate that is being issued to casual taxable person is for a period of 90 days or for the period for which it has been applied for, whichever is earlier. This registration certificate is extendable up to 90 days. The casual taxable person shall apply for registration 5 days in advance before the commencement of his business in Form Reg 01. He will also do PAN based registration and are required to pay taxes on advance based on his estimated turnover at the time of submitting of application. Next are the non-resident taxable person. A non-resident supplier with no business establishment in India are required to take mandatory registration under GST. For example, a US software company selling in India is required to take mandatory registration before making any supplies in the Indian market. Non-residents are also required to make few compliances, such as he is required to take mandatory registration under GST before executing any supplies. The registration certificate issued to NRTP is valid for the time period applied for or 90 days, whichever is lower. They will apply for registration 5 days before the commencement of business in India in the form Reg 09. This will not be a PAN based registration, rather this will be a passport based registration. They are required to submit advance tax at the time of submitting the application for registration. This advance tax will be based on the estimated turnover of the taxpayer. Non-resident taxable person is required to file GSTR 5 return. They are required to make application in Form Reg 11 for seeking any extension of validity in the registration. Let us quickly compare the provisions related to CTP and NRTP. A person who occasionally undertakes transactions in state or union territory where he doesn't have any place of business or in the course of furtherance of business are the casual taxable person. Whereas a person who occasionally undertakes transactions but doesn't have any place of business or residence in India are the non-resident taxable person. Regarding registration, there is a compulsory registration requirement under section 24 for both. Registration is done in Form Reg 01 in case of casual taxable person, whereas it is done in Form Reg 09 in case of NRTPs. PAN is required for casual taxable person, whereas passport based registration is done in case of NRTP. Registration is to be done 5 days before the commencement of business in case of CTP, and the same case goes with the non-resident taxable person. Composition scheme is not available in both the cases. ITC on input, services and capital goods are available for casual taxable person, whereas input tax credit only on import of goods is available to NRTP. Required to submit advance tax at the time of submitting of application in both the cases. Let us compare the taxpayer types based on their registration threshold, input tax credit, return types and validity of registration. So in case of regular taxpayer, the registration threshold is rupees 40 lakhs in case of goods and rupees 20 lakhs in case of services. Input tax credit availability, yes, input tax credit is available to regular taxpayers except for few exceptions. Return types, GSTR 1 and GSTR 3B are to be filed on monthly or quarterly basis as opted by the taxpayer. Also, GSTR 9 and GSTR 9C is to be filed at the year end. Validity of registration, the registration is permanently valid. Next comes the composition dealers. The registration threshold is turnover up to rupees 1.5 crores. That is, taxpayers whose turnover is up to rupees 1.5 crores can opt for composition scheme. Availability of input tax credit? No. Composition dealers cannot avail input tax credits. Return types: CMP 08 to be filed at the end of each quarter, and GSTR 4, that is the annual return, which is to be filed by 30th June of the next year. The validity of registration is permanent in nature. Next comes the casual taxable person. There are no threshold limit for casual taxable person. Input tax credit availability: yes, input tax credit is available to casual taxable person. Return type: GSTR 1 and GSTR 3B are to be filed by the casual taxable person. Validity of registration: registration is valid for a period of 90 days, which can further be extended for another 90 days. Then comes the non-resident taxable person, that is NRTP. For NRTPs also, there are no threshold limits. Input tax credit is available. Return types: the NRTPs are required to file GSTR 5, and the validity of registration is maximum 90 days. For any extension, an application is to be made in Form REG 11. So that's it for today's session. Thank you.